Good afternoon. Today is May 9th, 2022. We're looking at a 2000 tick chart, E-mini S&P 500 futures market, 21 EMA here in blue, 9 EMA in cyan, and a 200 EMA in magenta, to include a MACD here at the bottom. But we use technical analysis, price action, overall market context in order to place our trades. Let's go ahead and get into it. We start off the day by marking our level of resistance here at overnight highs, as well as marking a level of support here at overnight lows. Prices were pushing down with a break move to a new low. This downtrend has played out. Looking for prices to push back above EMA, and they do. Channel's working up before the market opens. Now, the first trade I was looking at today is we have this new low with the first entry short, second entry short, looking for that to fail. The reason I like this trade is because I did have this range drawn in. We are moving from highs of this range down to the lows of this range. You can see MACD prices are starting to cross over. The moving average is starting to cross over here. So momentum is changing in this region. But according to the rules that we have in place, we want to wait for this 9 EMA to cross over this 21 EMA. Until then, it would be an aggressive trade. So if you're trying to catch stops, your stop limit order is going to go one tick above this signal bar that you're trying to go long on, because you have people that are shorting this, that are in this trade right now. Next bar prints, there's not a close below this 9 EMA. You can see the 9 EMA and 21 EMA haven't crossed over just yet until we get this next bar. So once this 9 EMA crosses over, it becomes less of an aggressive trade and more of a confident trade, less risky. You're still not in this trade yet. Your stop limit order is going one tick above this signal bar at 875. Next bar prints, prices never close below 9 EMA, so your order is still in place. You're not removing anything. Once this next bar prints, you're in this trade. Prices continue pushing up a little bit before reversing. If you enter 875, prices go up all the way to 6.00, so that's 9 ticks. If you're going for 2 points, you would have been out for 2 points, out for the scalp. Following the rules nicely before prices reverse. No runner, but at least you get the scalp in there before prices push down. So this is the trade we just took. Prices kind of worked up to the top of this range before consolidating a bit for the EMA. You see 9 EMA and 21 EMA starting to flatten out. Bars congested here. You're not looking to trade any failures. You're not trying to catch any stops. Just let prices work. We have this new swing here that forms first entry long as prices continue down. Second entry long, looking to go short, continue riding this momentum. People are trying to pick bottom. They're trying to go back long. So you have your stop limit order one tick below, which is 9.75. Next bar prints. You're not in this trade. Bullish bar. Next bar that prints is a bearish bar. Again, your stop limit order is still in place here. You're not going to remove it unless we get a close above this 9 EMA. So your stop is still in play. Next bar prints, prices come from, you're in at 975. Prices go down all the way to 7.25. That's 10 ticks. If you're going for 2 points, you would have been out of this trade. Enough for a scalp before prices come back up. When you're in these trades, where are you putting your stops? So the way that I've been working it now, I want to be able to adapt my stop loss based on volatility of the market, but I want to do that in a controlled way. So what I want to start doing is putting my stop, if I'm entering long one tick above this signal bar, my stop loss is going to go one tick below the bar that I enter on. So here, if I enter one tick below this signal bar, my stop is going to go one tick above wherever I enter. Now we have a new low here. Prices come down for a first entry short, second entry short if there's a trigger here, but I'm not looking to catch this stop because we don't have enough room to the EMA. This would be considered an aggressive trade. We do have MACD that is crossing over. You see moving averages are crossing as we came from bearish momentum pushing up to possibly bullish momentum, but we'd also want to wait for EMA to close above this 21 EMA. So it's an aggressive trade. But if you have your stop limit order in place, prices tick down to trap people trying to go short before prices reverse and push back up. You're out for a scalp and potential runner. But again, it's an aggressive trade. Right here is where the 9 EMA crosses over the 21 EMA. So this is where you'd want to look at catching stops to go back long to the top of this range. So prices make it to the top of this range here, breaks the channel, potentially looking for a new high. We don't quite get it. We do have a second entry long that triggers here. The new high first entry long, prices come down second entry long. But again, according to the rules, we want to wait for this 9 EMA to cross over the 21 EMA. If we're trying to do a catch loss strategy, right, we want to enter one tick below the signal bar. So you have second entry longs that are trapped. You have people that are trying to go long that are trapped. They're putting their stops one tick below. So we'd want to catch those stops and ride the momentum back to the bottom of the range. But again, we want to wait for the 9 EMA to cross over. It's aggressive entering here. We want to stick to the rules. We want to wait for that 9 EMA to cross over. Does the trade work? Yeah, you're going to catch the stops and ride it down for a scalp. But with the rules, we really want to try and be disciplined when using them. So it's aggressive, but you could get in and out of that trade for a scalp. And I should need to change that to green. So aggressive trade there. With this range in play, as we continue to get more price action, we continue to have validity of this range. So prices are ranging from highs to lows. This is an opportunity. You have this new high, first entry long, second entry long that triggers above this bar. So you'd be catching stops trying to go short. The only thing I don't like about this is you're going short directly into the bottom of this range. Prices come down before reversing and stopping you out if you have your stop loss one tick above this signal bar here. So it's one thing to be cognizant of. Yes, MACD is showing bearish momentum. That could potentially trap you into this trade. So, I wouldn't necessarily be upset if you got into this trade. You are taking a risk, but it's not as high probability as we want it to be. This one's definitely more aggressive just because you're shorting directly into the lows. Back here, it's probably a little bit different only because there's a breakout. So you're not necessarily shorting into the lows. You're catching stops in case that breakout fails. And that's exactly what happened here. It was enough for a scalp. Here, you're shorting directly into the lows. So just be very careful about that. Now, as prices come along here, you do have this MACD that's crossing over. Prices are transitioning from a bearish momentum to potentially going bullish. We have this new swing low, first entry short, second entry short that could fail if prices trigger above this signal bar here. You have 9 EMA that's crossing over the 21 EMA. That's a failed second entry short that you can enter on. If you enter one tick above this signal, this bullish signal bar at 675, prices come up 875 to 9, so you're out for 9 ticks if you stay in this trade. I think if I'm entering somewhere, if I'm considering entering a position like this, I would want enough room to this 200 EMA. So be careful about trying to go long a little bit too high. You might not be able to get in time before prices reverse back down. So this is the trade that we just took before prices push back down below this trading range again. We could probably move this range down a little bit to accommodate price action just a little bit more. And we have this second entry short potentially setting up very similar to what we saw here. So we have this new low, first entry short, second entry short, and I marked it green because it's aggressive. If you enter one tick above the signal bar, you'd be going long, but you're fighting against this bearish pressure. So you'd be going long directly into the EMA, and the 9 EMA hasn't crossed over yet. So I'd be hesitant about catching stops here. Plus, as soon as this bearish bar formed, it closes below this 9 EMA, you'd be taking your trade out. You're not looking to go long at that point. Prices reverse, you'd be in this trade, and then prices would continue up for a scalp and potential runner. But again, that goes against the rules. I don't even want to mark it, but I did want to talk about that specifically. Wait for that 9 EMA to cross first. As prices continue up, you have a new high, first entry long, second entry long. The second entry long opportunity, but prices come up and then reverse. So those that are just comfortable taking second entry longs that took that, you would have lost that trade. Now prices continue chopping along a little bit here. We have this new high, first entry long, second entry long that triggers above this signal bar here. This 9 EMA has crossed over. MACD is showing moving from bullish momentum down to bearish momentum, so we could continue riding it short. The only issue I have is you're going short directly into the lows of this trading range. So I'd probably mark this more as an aggressive trade to take. And prices push down, you would have been in this trade. Your stop is going one tick above the bar that you entered on, but prices continue down and you would have gotten the scalp for at least 2 points before prices reverse. This is one of those opportunities. As prices continue down, you have a new high here, first entry long, looking for a second entry long to trigger. If it triggers above this bar, right, we look to catch stops to go short, but as soon as we get a close at or above this 9 EMA, that's when we want to pull that trade out. So we're not looking to catch any stops here. The scalp was made. Even though prices go exactly where we think they're going to go, we have to honor the rules, stick to the strategy, because in the long run, that's going to keep us profitable. So prices continue moving down. You have a break, move to a new low. So this downtrend has played out. Now what are we anticipating for prices to do? Possibly push above the EMA here. You have the short-term trend that's moving up with a break, move to a new high. We have a first entry short and prices come down for a second entry short if there's a trigger below this bar. 9 EMA has additionally crossed over as well, so we'd want to enter this catch stop strategy one tick above this signal bar here, but as the next bar prints, you get a close below this 9 EMA. So once you get that close, you're taking your order out of the market. You're not looking to enter this trade. And why do we do that? Because as prices come along, this bar forms, you would have been in this trade, prices would have came up and then reversed back down. If you enter one tick above, that's entering at 5.00 and prices come all the way up to 6.00. So if you're going for 2 points, you're going to get stopped out. That's why if we get a close below this 9 EMA, just pull your order. Prices do get congested before prices push below the CMA. Now we do have this new high for the swing. First entry long, second entry long that triggers above this bearish bar. When you see and you look at what the MACD is doing, we had this bullish pressure. Now we're crossing over to bearish pressure. 9 EMA has crossed over the 21 EMA. So put your stop limit order one tick below the signal bar here. You're holding your order here. As prices come down, you're in this trade and you're putting your stop one tick above the bar that you entered on, and prices continue down for a scalp. Now, as soon as you get that scalp, you get your runner break even, so you're not losing any money. And if you play it right, you could get a slight runner in here as prices push down a little bit more. So there's a slight channel that's working down here. We have a new low here with a first entry short. Prices push above the EMA second entry short in this downtrend. If you tried catching stops above trying to go long, you'd be going long directly at the highs of this channel. So we want to try and stay out of trades like that, because if you enter one tick above the swing here, thinking, oh, I'm going to catch stops trying to go long, this next bar prints, you get sucked into this trade before prices reverse and stop you out. So even while we have some things working in our favor, 9 EMA is crossing over 21 EMA, MACD is showing bullish momentum, we can't ignore the overall context. We have this channel that's working down. We're going long directly into the highs. We just have to be very careful about that. Now prices push below EMA before pushing back up, and we have this overshoot of this channel that's working down. So as prices work lower here, we have this new high with a first entry long, second entry long that could fail. Now I took this trade, and the only reason why I like taking this trade was because we had an overshoot here. An overshoot can generate momentum back to the opposite end of the trading range. 9 EMA is below the 21 EMA. MACD is showing bearish pressure. I enter my stop limit order one tick below the signal bar here. And as prices come down, you're in and out of the scalp very quickly. You're catching all the stops for people trying to go long. So you capitalize on their mistakes, and then prices can do whatever they want to do. But at least you get that scalp in there. You are entering a short at the lows. But again, I like taking that trade because of the overshoot that generates momentum back to the opposite end of this channel. And that's what prices will continue to do, is overshoot to the opposite end of the channel before prices reverse and correct. Now we do have a new low with a first entry short, second entry short. I had my stop limit order one tick above the signal bar. So there's a second entry short. People are trying to short back into the EMA. We do have this channel that's working up. 9 EMA is strongly pushing above 21 EMA. MACD is showing bullish momentum. We have room to the 200 EMA as well. So I enter my stop limit order one tick above that signal bar. I'm in this trade. Where's my stop going? One tick below the bar I entered on, but prices continue up and you're in and out for the scalp. So we have this short-term trend that's working up, break, potentially looking for a new high. We have this new high, first entry long, second entry long if there's a trigger above this bar, and there is, but we're not trying to catch stops. Look how far this 9 EMA is from the 21 EMA. If we're looking to catch stops trying to go short, we want to wait for this 9 EMA to cross over the 21 EMA. So don't try shorting directly into this 21 EMA, because if you try shorting, you're in this trade trapped before prices reverse and push back long. So if you follow the rules, you're going to be saved from getting trapped in these sort of situations. Now, as prices continue along here, I had another note here. Look how the MACD kind of thins out. You want to be very hesitant about taking any trades here. You're not trying to catch any stops, none of that. You could easily get trapped out. MACD likes to oscillate up and down, up and down. If it starts to thin out like this, we could be dealing with some congestion, overlap bars, and that's exactly what's happening here. Just a bit of overlapping bars waiting for this 21 EMA to catch up. And we do have a new high here before prices push below EMA. First entry long, second entry long, 9 EMA has crossed over. MACD is showing bearish momentum pickup. You could potentially enter short here. I wasn't here in the moment, but depending on how this bar formed, you would have potentially been in this trade for a scalp, or the trade probably never triggered and you would have just stayed out of this trade. So that could have been an iffy one, but I still wanted to talk about that. Now, as the MACD has a crossover here, we get this strong push in prices above the EMA. We had this new low down here for a first entry short, second entry short. We also had this new swing high with the first entry long, second entry long. I kind of like entering these because the second entry short happens first. You're trapping traders trying to go short, and then prices push back up. And if you enter one tick above where they have their stops at, you have two things working on your side. Additionally, we have 9 EMA that's strongly above the 21 EMA. Prices are also pushing above the 200 EMA. We had a higher low down here as prices kind of found their new low, and now prices are starting to push back up. So with all that in mind, I kind of like going long here. Now, depending on which bar you decide to enter on, you're going to put your stop one tick below the signal bar, but you'd be in this trade and then prices would have pushed up up for a scalp. You get a potential runner depending on how you play your stop loss strategy, but you definitely would have gotten the scalp here. Now, as prices are pushing up, I had noticed that the MACD, this momentum had been pushing down. You have the distance of these moving averages that are starting to get smaller and smaller, and that could lead to a reversal as prices push back down with bearish momentum. So wasn't looking to catch any stops up here. I wanted to see what prices were going to do. You get this crossover here of the MACD as prices continue down, but the 9 EMA never crosses over this 21 EMA, so we're just sitting on our hands right now. And then as prices push down below EMA, the 9 EMA crosses over this 21 EMA, prices are pushing strongly below 200 EMA. MACD has a lot of bearish momentum, right? When prices tried pushing up for this bullish momentum, they push back down below the zero line. We did have this new high with the first entry long, prices come down second entry long, so people got into this trade barely, and then as prices reverse, you put your stop limit order to catch their mistakes one tick below the signal bar. So that you'd be entering at 3.25, and we're looking for prices to come down to 1.25 if you're going for 2 points. So you're still in this trade, And we also can't forget we're putting our stop loss one tick above the bar we entered on. But we are looking for 1.25, and this bar forms, you get filled for a scalp. And depending on how you play your stop loss strategy, you would be in for a runner here as prices continue pushing down. So prices continue to push down. And notice how the MACD is losing momentum. As prices continue to go short, we're losing that momentum. So you have to be very hesitant about trying to go short here. And you see what prices start to do. They do start to consolidate a little bit. MACD is starting to thin out as we try and figure out what prices are going to do. So don't try looking for any shorts. If anything, I think there's a bit of support here. I'd be interested in going long. And there's an arrow kind of foreshadowing what I was thinking. We have this new low that forms, first entry short, second entry short that fails. 9 EMA has crossed over this 21 EMA. MACD is showing bullish pressure. We'd be entering our stop limit orders one tick above where everyone has their stops at. So we're trading a failure here. And as this next bar forms, you'd be in and out of this trade very quickly for a scalp before prices find some resistance here at 200 EMA and push back down. Now I had drawn this trading range in play here. Prices had moved to the top, back down to the bottom. Couldn't quite make it back to the top. We have the short-term trend that's working up with a break, move to a new high before prices reverse back down below EMA. We have this new high, first entry long, prices come down, second entry long that fails. 21 EMA, you can see starting to cross over this 9 EMA. MACD is showing a crossover taking place as well. So I'm looking to go short one tick below the signal bar, catch the stops of everyone that's trying to go long and cash out on their mistakes. So I have my stop limit order one tick below the signal bar here. I'm in this trade before prices come back out and stop me out. Your stop loss is going one tick above the signal bar. This was an unfortunate loss, but yeah, I ended up getting stopped out here. But as long as we're following our rules, in the long run, we will be profitable. No strategy is going to work 100% of the time. So it is what it is. We continue moving on. Another note here, just reminding, be careful about shorting into the lows. You have this new high up here. First entry long, second entry long, looking to catch people's stops. Where are people's stops? One tick below the signal bar that they have here. But you are shorting into the lows. This isn't a failed breakout. This is you are shorting at the lows here. So prices come down. You would have been sucked into this trade before prices reversed. And if your stop loss is going one tick above the signal bar, you're going to lose that trade. You're going to be out some money. So just be careful. Now, this is the last trade I want to talk about for today. I liked seeing what prices were doing. We're finding a little bit of support here. We had a failed breakout to the high side here. Prices came back to test the bottom one more time of this range, and then prices pushed strongly above the EMA. The 9 EMAs crossed over 21 EMA. Prices are pushing strongly above this 200 EMA. We have a new low here. First entry short, looking for a second entry short to trigger, and it does. I have my stop loss one tick above the swing here. This is where the stops are. If you want to enter prematurely, it's a little aggressive, but you can enter prematurely at 1.0. I had my stop loss ready at 1.25. Sorry, not stop loss, my stop limit order at 1.25. But then prices came down and closed exactly at the 9 EMA. It didn't quite close below it, but it closed right on it. So I took my trade out because if it closes below or on the 9 EMA, it's just a little bit risky. I'm trying to be as disciplined as I can with the rules. The next bar form, prices reverse. They come up, and one tick would have gotten me into this trade, and then prices would immediately push back down and would have scalped me out because my stop loss is going one tick below the bar I entered on. So that would have been an unfortunate loss. loss before prices continue exactly where I think they're going to go. So unfortunately, that's just the way the market works sometimes. Additionally, you'd be trading so much later in the day. It'd be 2 o'clock, 2 p.m. Central Time, around the time I'm taking this trade, and I never trade this late. So regardless, I still wanted to talk about that trade anyway. And that's pretty much the whole trading day. I mean, if you really wanted to continue on, you have this new high. First entry long prices come down. Second entry long that triggers by one tick. 9 EMA is strongly below this 21 EMA. MACD is showing bearish momentum. You enter your stop limit order one tick below the signal bar, and as prices come along here, you're in and out for a scalp at the very least to finish the day. So another potential trade there, but that's really it for today. Again, continuing to refine the rules of the strategy as I'm trying to make it as profitable as I can. But you really got to stick to the rules. You really got to be playing the strategy correct in order for it to make sense. I've seen people use different things to filter out bad trades. Use whatever you feel comfortable with and use something that's obviously going to prove to be useful to you in the long run. But that's it for today's video. Like, subscribe, comment, share the video. I appreciate all you for watching. I'll see you tomorrow.